Welcome back to another episode of The Week That Was, where we bring you the key highlights from the week that just went by. Nifty corrected 2.5% at 19,050 this week, in line with global markets. US indices declined about 3% during the week amid higher interest rate worries. The decline last week has led prices into the extreme oversold zone, so we expect Nifty to witness technical pullback towards 19,400 in the short term with a strong support at 18,700. Nifty mid-cap and Nifty small-cap indices have fallen about 10% from all-time highs and is likely to form a strong base at the current levels amid ongoing earnings followed by the next leg of upmove. We expect BFSI, auto, infra and PSU sectors to lead the recovery. FPIs have been largely on the sidelines since mid-July and they have turned net sellers in the last 2 months. FPIs sold nearly 25,000 crores in equities during October as risk-off sentiments prevailed due to elevated geopolitical risk and rising US bond yields. Along with leading global brokerage firms like Morgan Stanley, CLSA, Nomura, now JP Morgan has also updated India to overweight from neutral, saying investors can use near-term dips as opportunities to buy. A decline in bond yields may be considered as early indicator for fresh inflows in risk assets. Conservative investors could start fresh lump sum allocation to markets at current levels, but take it slow, as markets are likely to fall more. While aggressive investors could enter at current market levels without waiting for further correction. In the BFSI space, Kotak Bank, Axis Bank, Credit Access Grameen and Shriram Finance reported healthy performance. At current price, all these companies' valuation seems reasonable. For Axis Bank, benefit from Citi acquisition could act as a catalyst for valuation ahead. Maruti Suzuki had a monumental quarter as it reported its best quarter ever for these metrics. The big surprise here was the EBITDA margins, which came in at a whopping 12.9%, which is up 360 base points year on year and 370 base points quarter on quarter. Sonata Software reported consolidated revenues of Rs 2,036 crore as it is a seasonally weak quarter for domestic product business, which degrew 10.7% quarter on quarter. The international IT services business at $80 million was up 4.6% quarter on quarter. For FY24, it is expecting growth aided by Corn Symptoms, which is a new acquisition integration. We believe strong deal wins, enhanced presence in life sciences and BFSI through Corn Systems should enable the company to attain its growth targets. Tech Mahindra's revenue was down 2.8% quarter on quarter to $1,555 million as the key segment, which is communication, media and entertainment, remained weak. Due to negative operating leverage, the EBIT margins were down 206 base points quarter on quarter at 4.7%. The only solace was the total contract value, which stood at $640 million, driven by large deals. Near-term demand challenges for the company remain due to reduction in discretionary spends. How the new CEO diversifies the business from current communication-heavy construct will need to be watched closely. This week's much-awaited hidden gem is Action Construction Equipment. Action Construction Equipment, or ACE, is India's leading material handling and construction equipment manufacturing company and are market leaders in mobile cranes and tower cranes segment with a 65% market share. The company expects strong growth across its segment in the coming period. It expects overall growth of 20 to 25% in FY23 estimated and aims to double its revenue by FY27. The company also intends to increase its export share to 10 to 15% of revenues in medium term. With increase in demand for construction equipment, we expect strong improvement in margins. The company's operational and financial performance is likely to improve significantly in the coming period. Valuations look attractive considering the industry tailwinds, and we value ACE at Rs 910. That's all for this week's major news. We'll see you as the week that will be concludes, and all we're left with is the week that was.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.